Welcome to the channel, Abe. Thank you for making the time. I know you're all the way out in Australia, and for those who do not know who he is head of product for Nurp, and today he's going to be going over a few interesting things. So, welcome to the channel.
Thanks for having me, Matt.
Now, I want to talk about I see you have an algorithm open right now. Can we talk a little bit about this one, and then I want to go into the news that is circulating about a new potential product that you guys are rolling out, and I would love to dive into what that looks like, the returns, and how promising it looks on your side of things.
Yeah, for sure.
Okay, cool. So what's going on with the Dalo? What do we have open here?
Yeah, so this is a new algorithm that we have coming. We're very close to completion, really in the final stages right now. And we've added a few really cool features in this algorithm, which we have been working for quite some time, and we're quite excited about.
What are some of the new features?
Well, firstly, it's very, very optimized. So we've gone back and looked at 9 years of data and performance for each of the pairs that we're trading, and really fine-tuned the settings to make sure that they respond the best to that pair. And then also made sure that we don't have a lot of correlation amongst the pairs that we're trading. So we've optimized the trading basket as well.
So when you say correlation, meaning that it's not going to take opposing positions on pairs that are heavily correlated, because it wouldn't make sense.
Well, in a way, a simple way to think about it is if you have 10 trading pairs and 8 of them are AUD pairs, that's a lot of risk concentrated in the basket.
Okay.
Yeah.
Is there any factor in there that weighs something that would have made sense? For instance, you can't long gold and long the dollar. Just kind of doesn't work out. Is there anything that filters that by any chance?
Yeah, and we also look at currencies that typically have the economic policy related. For instance, the Canadian dollar, AUD, they tend to follow USD.
Okay.
So if there's big USD news, especially related to interest rates, that can introduce a fair bit of risk in those pairs.
Awesome.
Yeah.
And so, first of all, the Dalo is not a new product. It's been around for a little bit.
Yeah.
This is a new rollout of that older product, correct?
Correct. Yeah, we had Dalo low drawdown, Dalo high profit, which are 2 configurations. The high profit was a bit aggressive, so we never ended up launching it.
Okay.
But we wanted to make sure we can still get really, really solid monthly performance while keeping the drawdown within our objectives. So this is a blend of the two, highly optimized. And then the other big feature that we've introduced is 2 forms of hedging in the algorithm. The first,
2 forms?
Yeah.
Can you explain that?
Yeah, the first is just being able to go long and short concurrently on the same pair at the same time, which we had in other algorithms as well. The other one is more advanced form of hedging, which only kicks in during very strong trends. Because we're scaling into positions, in strong trends, this new form of hedging really protects the account against extreme drawdown and provides a much bigger cushion for the algorithm to continue scaling and make sure the original sequence closes in profit as well, despite being in a very strong trend.
Interesting. And when will this be accessible to the users or anybody looking to get it?
The algorithm, we're in final stages of testing right now. We are planning to release to a limited set of our mastermind high tier clients this month. And after that first initial lot of testing, I would say Q1, we should be comfortable releasing.
So Q1 2025, we could expect the Dalo to be fully accessible to not only the existing members, but new potential people.
Yeah.
Nice. Well, okay, so the Dalo is a little bit of old news. Let's get into the exciting part. There's new products. Well, I said plural products. So how many new products are there coming out?
So we have 1 new product with 3 new algorithms that are coming out.
Okay, so it's like just a suite, and then it has alternative ones that they could license. What are those?
Yeah. So we have Odyssey, Buterin, and Argos are going to be the 3 algorithms in that offering. It's a completely separate product just because the way it's structured and the offering and how users interact with the product is quite different to what they've been used to with ATA, and hence why we've packaged it under a different product.
And interesting. And what is the biggest thing that differentiates it from our other products?
Yeah, a few things. Firstly, the product itself has been built more based on expertise for institutions. So the team that has really worked on developing the product is a blend of our team and a strategic partnership that we formed out in the marketplace with a company that had been servicing a lot of institutions, and they come from a very heavy AI focus. So the algorithms are extremely, well, almost all of it is AI focused and leverages a lot of AI. So it was a really natural fit between the two teams because we come more from a technicals based market analysis, understanding of the charts and price action, whereas our partners come from more of an AI background. So it was a really good blend of the two. And our objective is to have a long-term strategic partnership to deliver industry-leading products in the marketplace.
Based off of what you've seen, how long have these products actually been running?
Yeah, so one of them, which is Odyssey, which is the FIFO compliance. So that's the other thing.
Can you, well, let's pause there for a second. For those watching, what does FIFO compliant even mean?
It means you can run it on US brokers because majority of US brokers require FIFO-based accounting, whereas outside of the US it's LIFO, last in, first out based accounting.
LIFO.
Yeah, so the algorithm has to behave slightly differently to account for that.
And what is the upside to making it FIFO compliant?
A few upside. One is you get to run it on onshore, local US brokers, which typically have a lot more regulation, or at least regulatory oversight. So they tend to have a lower risk profile when it comes to safety of your funds. And then secondly, these algorithms also don't need as much leverage. So that's the other thing, because in the US, typically it's capped to 150 leverage. So you can't really get above that unless you're a very, very big institution. So not as at the retail level.
Interesting. Okay. Wow. Okay. So now that we understand what FIFO and LIFO and what all this means, it's basically lowering the third-party counter risk of who's your custodial service.
Yeah.
Okay. Now back to the product. It's heavy in AI and it only uses AI, or do you know any type of information that you could give on how the product operates?
Yeah, so it is mostly, like I said, an AI-based approach where data is fed into AI models which continually update and adjust based on how the market is reacting.
And how has that played out? You mentioned the Odyssey and you were talking briefly just on how long it's been running.
Yeah.
Can you explain what that track record looks like over what period of time? And also, lastly, I know it's a jam-packed question, is it running with live capital in there right now?
Yes, so the track record we have is since 2022, and it's been averaging about, if we just talk numbers, of course that's historical performance, it doesn't guarantee future performance, but so far about 6% per month. On Odyssey it's less than 5% drawdown, which is quite exceptional.
So you have a higher monthly average and a lower drawdown. Typically what we see across the board for algorithm companies is higher drawdown, lower monthly averages.
Yeah.
That alone is a really big,
Yeah.
promising thing to.
Yeah, and it's
No.
also positive pips because a lot of algorithms that we see out in the marketplace, they don't capture a lot of pips in terms of percentage in point movement of the price, which means they typically have to scale in a lot, which creates a lot of drawdown. Whereas here we have thousands and thousands of positive pips captured, which our clients will be able to see in the track record. And that means we don't actually need to scale in. The algorithm's very active and it doesn't need to scale in as much. There's also very robust risk management. So the max drawdown is capped to 3.5% per pair and 30% on the whole account.
When you say max drawdown, what happens when it hits that potentially, even if it does or doesn't, that 3.5? What is it? What happens at
Yeah,
max?
we'll just close the trades on that particular pair.
The person will close it, or the software will close itself out?
The software will close it, yeah.
So the person doesn't have to be there having their hands on the computer and exit stuff at 3.5%.
Yeah, exactly.
Okay.
And also it's the way these products are structured, or these three algorithms, they're actually a collection of many, many subsystems. So it's a combination of many sub-strategies forming a master strategy. And that also lowers the risk because, like I said, if one particular pair has a huge news event, the algorithm will cap the drawdown to 3.5%. However, if highly, highly unlikely, I mean, we've never seen really this in the last 10 years or even longer, where 5 or 6 or 7 different pairs have drawdown concurrently. But even if that happens, then the max drawdown is still capped at 30%.
Interesting. So now we're solely speaking right now on the Odyssey, correct? Now, can you give me a little bit of info on the other two that you didn't really mention on?
Yeah, so the risk management's the same on the other two.
So 3.5 max drawdown, it'll exit trades.
Yeah.
Same thing. Okay. And what's the track record looking on those for performance-wise?
Yeah, so on we have three. So one I mentioned is Odyssey. The other is Buterin, which is a crypto algorithm, and that one also the drawdown is slightly higher just because crypto has a volatile nature, but it's also still under 10%, and monthly performance is about the same 6%.
Okay, nice.
Yeah.
So now let's dive deep into the other two products. Can we talk about the names, the strategy, and also their track records?
So we talked about Odyssey, and now we'll talk about Buterin. Buterin is a crypto algorithm which primarily trades Bitcoin and ETH. Also has a track record since 2022, actually start of 2022. Monthly performance is about the same as Odyssey, so 6% per month, and max drawdown is under 10%. It is slightly higher than what we talked about with Odyssey at under 5, just because of the nature of crypto itself.
Now, what is the similarities between, I know we have the Nakamoto, which we haven't really fully rolled out. Am I incorrect by saying that?
Correct, yeah. We haven't rolled it out because
Okay.
we're still making enhancements to it.
So what's the difference between the Nakamoto and the Buterin, besides the names?
Yeah, so with Nakamoto, we are actually revamping it quite a lot. And we are trying to, right now, make it a single entry system, which looks for very specific conditions and primarily trades more wider suite of altcoins. That's what we are building right now, but because we changed the vision for Nakamoto strategy to really make it a standout algorithm, it's going to take a little bit more time.
So, and the Buterin only trades what? Just Bitcoin and ETH, nothing
Yeah.
else?
No.
And the Nakamoto will find other alts.
Yeah.
Okay,
Yeah.
interesting. And in comparison to the Odyssey and Buterin, Buterin holds more risk from what you've seen in the data compared to Odyssey.
Yeah, I think the risk management is effectively the same. The drawdown is slightly higher, still under 10%, which is pretty impressive.
But it's more volatile.
Yeah.
Okay.
Yeah, just because of crypto, the moves are
Of course.
wider, yeah.
And now the last product, what's that looking like?
That's Argos, which very similar in terms of performance. So it's just about 6% per month, max drawdown of 7.5%.
Why? Okay, so hold on. Odyssey, 6%, 4% drawdown. Argos, 6%, 7% drawdown. Why would I not just use Odyssey?
Yeah, Odyssey actually has a minimum account balance of 50,000, whereas Argos is 20 or 30, which we're still finalizing that.
And why is that?
Just because of the risk profile of the algorithm and how it behaves. So with these ones, the more balance you have typically lowers your risk profile because it can handle drawdown situations and margin better in the account. So that's why with Odyssey, it's a higher requirement for a minimum account balance.
Interesting.
Yeah.
Okay. But strategy-wise, are they still the same or?
No, they have differences. That's why they're two separate algorithms, but they're built on the same underlying principles.
Okay. So when it comes to setting up these softwares, especially the ones that are coming out now, what is the barrier to entry for an individual? Am I going to have to be tech savvy? Do I have to do anything in particular to have these operating?
Yeah, so the nature of setting up and watching these algorithms is different, and how, like I was saying, the client interacts with the product, hence why we package it into a separate product instead of just adding these three algos into ATA. And the reason for that is with the feedback that we receive from clients, we noticed that due to broker differences, spread slippage, etc., a lot of clients weren't actually getting the same performance that we were getting on the same algo on our accounts, on the company accounts. And because of that, we changed just the way they execute in this product, which is the client can effectively set up on our platform and their trades will essentially mirror the trades from one of our master accounts. And that way that makes sure that they're taking the same trades at the same time. And also it's a much simpler way for them to set up. They don't have to install any license, any algorithm files. They will be able to see the trades as they are taking place, and they can close out the trades if they want. They'll be able to select their risk profile as well. But beyond that, they don't really have to do too much.
So as a user, this eliminates, for instance, I'll speak from experience here. I'll notice sometimes my algorithm will take different positions, or at least at different times, versus my friend who's running the same one.
Yeah.
So having it all linked to a master account, does this eliminate that?
Yeah. Yep.
So we'll all basically be getting in at the same price since we're just using one brokerage. Or-
Yeah, so we are looking to have a few options of brokerages, but within those, we'll look for brokers which have very minimal slippage, because naturally, if one broker can't execute the trade at a particular price, it will be slightly higher or lower because of slippage.
Yeah.
But if we select particular brokers to work with, ensure that they have very low slippage, then we should not have clients experience that. And the other big difference is on an ongoing basis, there's not, dynamic changes that they have to do to the account, because like I said, the only two things would be they can select the risk relative to the master account, and they'd be able to just see the trades, but they don't have to go and update the pairs when we release a new version, or really watch the margin on each pair or do anything like that.
So really, as a user, this makes it far more easy to manage and run the software, because now I'm not really having to go in there and maybe pause auto trading or do any of these things that I previously would have to do.
Yeah, it'll be much more hands-free relative to ATA.
Nice, interesting. That's a big thing. And that definitely eliminates a lot of the risk and possible headaches when it comes to licensing, right? Because sometimes we can have issues with licensing and different people experiencing things with their license. And a lot of those errors come up when you're having to issue thousands of different licenses.
Yeah.
So having it just all linked to one kind of eliminates all of that.
Yeah. Yep.
Sounds like we just need those.
Yeah, we're working on it.
Nice. Okay, well, I'm excited, and thank you for making the time today. And you guys will definitely be updated when this comes out, because I will probably be funding an account in which you could document the whole thing with me.
Thanks for having me,
Evan.
Matt.